Greeting everybody, this is Jeff Scott and this is my weekend review. Thanks for joining me today. This is take two. My first take did not seem to like me for reasons that I still don't know. Open up my PowerPoint and let's get started. First of all, let me wish everybody a happy and safe 4th of July. This could be a great week in the market, but if you're not safe with your traveling and your other activities, it will be not a great weekend. So best of luck to everybody. Make sure this is the right version. Yep, all right. So I titled today my top-down review, New Highs Ahead for June 30th, 2019. I'm optimistic for this week. I'm optimistic for a number of reasons, which I'm going to show you. And I do think this is our time to break above the triple top. I'll also tell you if we fail this week, I think this is very bad and ominous for the market because that will mean we failed at a triple top. But I'm going to stick to the bullish stance and let me prove it to you. This is for education purposes only, and recommendation of the spirit of education, not investment advice. I'm a doctor, not a broker. I'm independent. I pay for my programs. Nobody pays me to say anything. And trading involves risk, and you alone are solely responsible. I entitle my education when I teach people to be your own guru. I've learned from the greats. I've learned from William O'Neill, Canslem, Ian Woodward, and Ron Brown, George Lee, my buddy John Person, Van Tharp, and Cigar. What I need in my desert isle are TradeStation, Thinkorswim. I have a lot of indicator sets for that. And then HGSI and EdgeRater. And then I don't know why this never sticks here when I type it in. Maybe I forget to hit save. But I use a lot of Cigar's tool, and his company is www.superiorprofit.co, and look for his Edge, Vital, Q, Elite tools. And they've become a very important part of my trading. HGSI, here's the website, free 30-day trial. If you click on investing strategies, you will see my name and others with hundreds of videos of how to use the program and no cost to do the videos. As always, I like to look at where we are in the market. I spend a lot of time in the market because that will determine how I do this week with my account. The market felt toppy early in the week. We had a nice recovery Wednesday, Thursday, Friday. It feels like because of news we're going to go higher, that news being Xi and Trump and also North Korea. Since the market was in a questionable, uncertain position, I did have smaller positions and I had some shorts on. I covered all of that at the end of the week, so I'm pretty much wide open. So if this market has a pop and drop, I'll get hurt like everybody else will. But I've got a lot of cash that I've sat on the sidelines, so if there is a short squeeze, I'm going to jump in and buy some more. You can see Friday ended all green. Amazon was actually down $15, but I was positive for the week, positive on the day. And it was a great week despite a horrible Tuesday beginning. Major market indexes, I'm just going to stay right here. You could see that on the NASDAQ, we had a couple of good days after we had in between Wednesday and a lousy Tuesday. We set the high of the year on Tuesday. Of course, I was at the triple top. It looked like we were going to fail. Again, this is the futures, not the cash market. The NASDAQ, we did not get back up to the April top, but we had a couple of strong days, as we did on the Dow. The Russell actually outperformed. You can see these big bars that occur on Thursday and Friday. The VIX down in neutral land, and the dollar has pulled back, which has been good if you've been long gold. On the weeklies, you can see that we are in nice uptrends on the top three, the E-minis, the NASDAQ futures, and the YM. The Russells had the toughest move of it, but they were the strongest last week, and they've had a nice move up off the bottom. The VIX, again, complacent with the sell signal, and the dollar has pulled back, which has been good for metals. If I look underneath the indices, I get a sense of what's going on in the market. Now, the 10 years and the 30 years dropped. The 2 years must have dropped more because if I look at the yield curve on the 210, it's actually trended up this week, which is good, less likely showing an imminent recession. Now, falling rates are good for REITs, MLPs, utilities, dividend payers, and home builders. Rising rates good for banks, regional banks, and insurers. It's interesting, the ones on the bottom outperformed, but some of the ones on top are also defensive plays. And as the week moved on, defensive plays got hurt. AD lines continue to move high. The white's the AD line, the yellow's the S&P, setting all-time highs on both the small and the big stocks. You can see the NYSE also at an all-time high. And notice the big guys, the spiders and the Qs gave it up a little bit, while the transports and the Russell, which had been laggards, actually turned up on the week. I think that's got to be considered bullish. And the other thing to point out here is with the weakening of interest rates, bonds continue to outperform. Breadth is getting close to overbought levels. This line here I wrote a while ago. Whenever the 200 hits that, it appears you get to a point where the market either goes sideways or pulls back. We're getting close on the 200. On the 40-day SMA, we're sort of mid-range. But where it's most apparent is where we are in the 3-month or 12-week new high, new low, where we're getting near reversal areas. What may save us is we may see rotation continue out of staples, real estate, and utilities, and allow the broad markets to go higher without triggering that almost always reversal signal. The daily and weekly McClellan track higher with the index, so we're going to go right through it. There's other things within the market. Within the S&P 1500, 75% of the stocks are above the midline of their Bollinger Bands. That's very bullish, maybe too bullish. And now we're starting to approach way overbought with 16% of the stocks, the S&P 1500, above their Bollinger Band. Now, what I've seen over the last year is it can get worse before it triggers a pullback. We did see a Hindi fire on Tuesday. I guess the market was the market? Yeah, on Tuesday, we had a Hindi fire on the market. Get all my days straight. And the only thing that saved me on Tuesday was Amazon was okay, I think, at the end of the week. But Tuesday we had a Hindi. Hindi was a rough day in the market. We didn't see it on the NASDAQ, and then we quickly came out of that signal. So that's something to keep remembering despite my bullish tone today. Market tone, the Woody indicator where my arrowhead is all bullish. If I look at sector strength, weakening in the staples, utilities, and real estate, which you probably want to see if you're bullish. Canaries in the coal mine, the old thing, plus a couple others. Looks to me like they're grinding into resistance. A break above here would be bullish. The index that I created in March to look for a top has never rolled over, which is fascinating to me considering how much the market did roll over. There's no V here, and it looks poised for a breakout. Now, I want to point out there is seasonality at this time of year, probably around 4th of July. And if you look at the best performers to the upside and the worst performers to the downside are the long and the short technology funds in the NASDAQ. So this is a good time to be long the market. There's some strong seasonality in the major indices. News-wise, whenever you have the monthly unemployment report, it's a big news month, news week rather. With the holiday, you don't have many Fed heads speaking or much other. You do have some ISM, some trade, and some jobless, and some energy. This week, you do not see much earnings, but this is a big week of earnings. You'll see Facebook, big month of earnings, Facebook, Amazon, Netflix, Goldman, banks, American Express, Google, among others, that will have earnings that will be confirmed as this month goes on. Now, one thing that I did notice sitting at my desk was that on Friday, this is about 4 o'clock, we had an up bar on Friday, a reversal bar. This is using the Q signals. And then we ripped higher as soon as the market closed. Now, I don't know if that was a big imbalance to buy on close, or was this short covering or buying new long positions. I was surprised because I thought people might be lightening up and causing a sell-off at the end of the day because of concerns of weekend risk with the G20 and others. So financials of the market higher. We had one of the strongest Junes in years, and the Russell starting to show some strength. We spiked into the close. Later we learned that Xi and Trump have declared a truce, suspending the next tranche of tariffs, easing some of the sanctions on Huawei. And late Saturday, and then this morning, there was an announcement, and then actually the first time a U.S. president, probably ever, has stepped foot in North Korea, as Trump has found a way to quiet down the talk about the Democratic convention and now and turn it on him. Despite the outperformance in June and strong first half of the year, we do appear poised for another leg up, and I think we might see a short squeeze on tariff relief on Monday, which may be further juiced by a strong holiday week seasonality, potential rate cuts. All that said, we are right below a triple top. You'll see some boxes in a few seconds. Plenty of risk out there, but I think we got a melt up starting on Monday. What's the risk? If things look better on tariffs, then the Fed could become less dovish. Iran could become more aggressive. And then you've got 20 Democratic hopefuls whose main job will be to become populist with lots of giveaways like school debt forgiveness, more taxes on the rich, and a lot of attacks on McConnell and Trump. I got a lot of calls on Tuesday with AbbVie selling off. People know it's a stock that I've liked in the past and whether I was going to play the sell-off. So let me just answer you all at one time. The answer was yes. I was out of AbbVie, and I've been out of AbbVie because once it breaks below the 200-day moving average, it's in a downtrend, and there's no reason to own it, even though it has a dividend like a pharma company. On Tuesday, they announced a buyout of Allergan, and the market it taked. It had a huge drop, closing near the end of the day. I saw the bingo, and I saw that the dividend was 6%. So I'm interested. I'm sharpening my pencil. On Wednesday, it bounced at the open, and I said, I'm going to buy it. You'll see I bought it at 10 a.m. My target's somewhere between 76 and 78, and I put my stop below the low of the day on Monday, or Tuesday rather. If it pulls back below that level, I don't want to be there. Now, what it did do was it moved up. This was Wednesday, Thursday, and Friday into the 8-day EMA, closed at its high. I took off half my position, and we'll talk about what I have left, which is another 60 calls. And what I want to show you is that even though there was only an 8.7% move on the stock, and if you had spent $60,000 and bought, about $60,000 and bought 1,000 shares, you'd be up $8,000. I want to show you how options were a little bit different. So this is the half I have left. 6,000 shares is 60 calls. So I bought a synthetic, which would be buying calls and selling puts at the same strike price. And I was about $3 in the money, so it cost me $1.74 for that spread. The P&L of these two is exactly the same as a stock. It's a synthetic stock. To protect my downside in case it broke down further, I bought a $60 put for $1.15, and that limited my downside to $60. I paid $2.89 for each contract equaling one share, or 10 contracts equaling 1,000 shares. And I had a downside risk beyond that of $5, which is the delta between my short put and my long put to backstop that. By buying this long put, it cost me more money, but it took away unlimited downside risk and also gave me margin relief. So I paid $2.89 on this tranche. My overall cost was $17,000. It closed on Friday at a value of $44,000, $27,000 gain with a 157% move. I took off half. This is what I have left. Transaction was early in the morning on the 26th, which was Wednesday. Now, other things I want to point out here. I controlled, for every share of this I controlled, it cost me $2.89. My risk was $7.89, so about 12 or 13% from where I bought, if I had bought the stock. You can control a lot, even in a small account, at $2.89. And in 3 days, that's a pretty impressive return, if I say so myself. So let's go ahead and start the top-down review. All right. Let's go into HGSI, take a look at the major indexes. So I'm going to put a top-down review on it, which is just price and volume. And what do I see? And if you're a growth stock investor, you have to be excited. So as a growth stock investor, I'm excited because I see small cap, mid caps, Russell, NYSE, NASDAQ, and biotech at the top. That's where I live. And on the bottom, I see the dollar, volatility, and the big stocks. So if you are a growth stock investor, this was a great week, at least the last 3 days for you, and looking good, I think, going forward this week. So let's take a quick look at the major indexes. And I'm going to talk about my box and where the short-term risk is. Everything that I'm looking at, everything that I'm talking about, says to me that this market is going higher. Now, back here in May, I put in a box, and I talked about what the market's going to do. There's actually a box in a box, but I think for me the box went down to the 200-day moving average. Do we break higher, go to all-time highs? Do we fall out of the box, or do we go sideways and then break out? We had a false breakout here, came back into the box. Just so that we're all on the same page. We are still in the box, and we failed at this box. The box was written long before we failed. So I'm not going to get overly bullish till I break out of the box. I think this is the time to break out. So we're not at the top. We have some room to go. But keep in mind, we got to break out of here, or we're going to go back in the box and continue a sideways market. That's the S&P. You want to see the same thing? Here's the Dow Jones Industrials. I drew the box here. Still in the box. How about the NASDAQ? It looks a little different. The NASDAQ, frankly, looks great. We pulled back, tested, and bounced off the 50. But guess what? Still in the box. And the Russell 2000, which I already mentioned, had probably the best week of the bunch, breaking above the 50 with a kahuna and a new buy signal. I look at these. I think short-term it looks very good. I think the NASDAQ and the Russell look the best. We break through the top of the boxes, we're going to move. And new highs will be with us. But that is a triple top range on the S&P on those boxes. So show me the money. All right, just to continue on here, let's take a look at the dollar. For completeness sake, the dollar has pulled back, sort of forming a little bear flag. Also getting down to where it was in April. Volatility is at a place where it's complacent. And with the dollar week, gold and silver have had nice moves, and they both are in bull flag. So a break out of the flag would be interesting on both gold and silver. I think the dollar will continue to be bouncing around. I guess the one thing I didn't like on gold on that weekly, you have a shooting star. But if anything, the markets look strong and poised to go higher. And then we'll go into the industry groups. I'm going to put this on pause and be right back. All right, continuing on. If we take a look at the industry groups, put the top-down analysis view on it, I've got 174 groups. And if I now go to 2-day force up, you can see that 84 of them are positive. 5-day force up, you'll see most of them are positive too. You got 81. That's a big number. If I look at 5-day down, very few, only 5 groups over the last 5 days are down. And 2-day down, hardly any, but I think just mass merchandisers. So within that group, just as an example, I actually have liked Ollie's on the way up, and Ollie's has pulled back. Let me go to the stock view here. And I'll put this on a list not on my buy list, but to just check it every couple of days and see. It's at a place where if I was to look to buy, it's pulled back nicely, but I need to see a reason, some momentum coming in and an up move. So it's not going to be on my buy watch list. Notice the volume here. Friday was a rebalancing of the Russell, so there'll be a number of stocks that you're going to see some high volume on. And I think it was more related to the rebalancing than anything else. All right, so let's look at winners, not losers. Let me just talk about how I do my weekend review, personal review. I start by downloading from various websites a large number of lists. This is where Jeffrey is a little bit ridiculous, if you ask me, but it's something I'm used to. I run a number of scans, and these are the results of the scans in EdgeRater. I download a number of lists from IBD, MarketSmith, and other sites, both bullish and bearish. Then I also have a number of scans from TradeStation that are in here as well, stocks from those scans. And I basically create two substantial groups. One of them I call weekend bears, in which case this week, it went from about 1,000 2 weeks ago to 339 as the market improved, and potential buys. There were 1,542. Then I'll put a filter, and this week I put a $5 and 500,000, and I brought that down to 842. The next step is I actually looked at all those 842 stocks, and I put them into a buy watch. I took the stocks in my original buy watch and the stocks that were John Person weekly or monthly high close dojis. I put them into another list. I go into TradeStation. I put them into my screener, and I looked at every one of these, generating more stocks to put in the buy list. So I ended up the week with a rather gigantic, for me, buy watch list with 81 stocks. I did, on the bearish list, I went through them, and I wouldn't short anything on Monday based upon the seasonality in the market and the what it feels like going into this market. But I got stocks, 12, 14 stocks, 15 stocks that I'm going to put in an index and look for evidence of the market rolling over. I'm not shorting anything, so I'm not going to go through these. After I built my big buy watch list, I supplemented it with a quick top-down review. During the week, I will be monitoring every stock that made it to my buy watch within TradeStation, within the large radar screen, looking for stocks that are having signals, whether they're Q, my own from HGSI, John Person, etc. And then I'll drill down. During the week, I'll be running scans. I've got a number of scans that I run looking for stocks that are making moves. But during the week, I also do the following top-down review. I rank them by force, and I go through the top 10 groups or so to see what's working. So I start with biotech, and it's kind of interesting because the captains of biotech are Celgene, which is now being bought, Biogen, IDEC, Regeneron, which are toast, and then the other big one is Gilead, which is sideways. Because of the underperformance of the generals, biotech has been weak this year. We're starting to see some movement from some of the smaller stocks. So here's Sarepta. This is an interesting company in that they had the first approval for a muscular dystrophy drug. Really been sideways, broke out on Friday. They had expansion of their indication and had a Bible gap up, a mobile breakout. My signal was fired on Thursday. Pocket pivots and kahunas. I'm not a big chaser of this, and the reason for that is fundamentally, its earnings are not the story. It still loses money. It's a story stock. I could find better things. Hold on a second. The next one down the list was Avid Biosciences. This one had good earnings and it had news. Now notice down here, with my buy signal, 73% of biotech is in a buy. And on Friday, there were 38 new buys and 7 new sells. And this weekly bullish doji reversal is just my take in HGSI of John Burson's high close doji. So this one has a lot of bullishness. A viable gap up out of a squeeze, a mobile breakout. My signal the day before, 2 days with kahunas. That weekly HCD, this is exciting. This should go on my buy list, and I believe it already is. The next one, Iovance, they have a cancer drug. The data came out in May. It was presented in June and continues to run up. Has a $3 billion, I believe, market cap. This is a buyout candidate, and I have a position here, and I'll probably take some more with this new breakout. Alexion is an older stock. They've got some rare disease drugs. Kind of a sideways play. Also had some label news. They had the label expansion. I think Sarepta had a study came out, but a label expansion on Friday and a move. I'm not a big fan of this stock. It's a great company. Its multiple is pretty good compared to its growth. Does not pay a dividend. It's just a sideways. A way to play biotech has been for me to play LABU. And you can see on the weekly on the right how this thing has been horrible this year. But if biotech is going to make a move now, and it's got a lower low here, a higher low here rather, and it's got some momentum coming in, I like playing LABU. Now, also on this list, there were a couple things that I thought looked interesting. All right. See if I can find them. NTLA. Don't know anything about them. Sideways, 3 kahunas in 4 days. Bunch of buy signals out of a squeeze. That gets my attention. Bluebird has some innovative gene therapies starting to move up as well. Higher lows. Not a whole lot of momentum. But biotech was the top group on, at least with this model, on Friday. Specialty pharma. Don't know Zogenix, but it had a big move on Friday, as you'll see. 2 Bible gap ups in a row. That should get our attention. USANA makes weight loss, nutritional, kind of a pullback, a sideways move. Momentum coming in out of a squeeze. I'll tell you, this one looks a lot like Tandem did last April, and those that have followed me know what that one did, 6 to 66 in 8 months. It's an expensive stock already. It's pulled back some. What did I like in this group? Cormedics. Have no idea what they do, but pulled into their moving averages where they came together. You've got a kahuna, my signal fired, a PSCR supportive, a mobile breakout. Weekly bongo is green. That to me looks like a stock that wants to go higher. It also had a weekly high close doji. TG Therapeutics, my son called me about this one. Uptrend pullback and a breakout. This one looks interesting down here. Preclinical, some cancer drugs. Jazz, an old name. Sideways move, breaking above the 200-day moving average. I like that as well. So healthcare's got a number of names that made it to my list. Application software. First one's a beautiful leader. Little pullback and a chance to move. This one must be added to the Russell 2000 because look at the volume that came into the stock. Cerner, technically a company that I compete against, as they make electronic medical records as well. Nice uptrend, a little bit of a pullback, pocket pivot, kahuna, my signal the day before, mobile breakout from a squeeze. This is the kind of stock I like to buy, also with a weekly high close doji. Salesforce, this will go into my category of stocks that I keep on a list to see when they get oversold, and give me a buy signal. Give me some momentum off the 200 and I'll buy this one. I just don't see any momentum yet. Anything else here that looked good? Nope. Back. Banks, regional and large banks were interesting this week. I'll show you a couple. They look good. PNC breaking out here. Mobile breakout from a squeeze. Pocket pivot, kahuna. SunTrust, ready to break. BBT, ready to break. KeyCorp just broke out. First Republic, ready to break. Regions, ready to break. This is all due to the stress test and getting good reports, allowing them to buy back stock, increase dividends. This is the spider for that, and didn't like what that just did. And it's got to get above the 200-day moving average, but with a bunch of pocket pivots, kahuna is a green bongo coming out of a squeeze. This is one way to play that. We'll get to the big banks in a few minutes. Semiconductor devices. This is a group that's been beaten up, but it's probably one of the big winners. I think I showed you on the seasonality that technology stocks look really good right now. And if Trump and Xi made progress and Huawei, however you say it, gets a bit of a break, I think you'll see semiconductor stocks rally. So Micron's rallying in after earnings, hit resistance. Maybe it gets another bump up. NVIDIA, this thing just has been in a downtrend ever being a $289, $300 stock. Its earnings drop for a year and then they increase again. So I don't have a whole lot of hope for it until it breaks above the 200 and stays. Qualcomm has broken above the 200. In an uptrend, this was kind of interesting on the weekly chart there. That might be one to watch. Broadcom is another one to watch. As I looked at this group, they didn't jump out at me for the most part with great patterns and say, buy me, buy me, buy me. They're all pretty beat up. One that I've been watching is this laser, LASR. And the only reason why I like it is it's really sitting here on where it likes to bottom out. It's basing and had a bunch of momentum come in on Friday. So I'm going to watch that one, but I'm not buying it yet. I'm just watching it. Oil glass services. Oil's been going up for a while, pulled back some, but these things have just done nothing since the beginning of the year. Here's Schlumberger. I talked about it last week. It had some bullish weekly and daily high close dojis over the weekend, breaking above the 50. Not much momentum, 5% dividend. I prefer this one. Does not pay a dividend though. This is pump, pull back to the 200 and move up. A breakout above the 50 would have to be considered a buy. Two kahunas, my signal, mobile breakout from a squeeze, a reversal of the chandelier stop. Move above that 50, I want to be in it. I'll probably put an order in to buy as it moves above it. McDermott breaking above the downtrending 200. These have just been beaten up for a long time. National Oil Varco hasn't turned up yet, but looks like it's bottom. There are a couple others that I liked. I liked Cactus. Pullback looks like it's ready to run 3 out of 6 days, getting a kahuna, 2 pocket pivots, mine in a squeeze. Looks like it wants to go higher. FTI has started to break out. So there's something going on in oil services. Exploration and production. We're talking about stocks that are kind of low in their patterns. And again, oil prices have gone up since the beginning of the year. Why haven't these not gone up? EQT, I think they do some shale in Pennsylvania, among other things. I see whenever I fly out of Pittsburgh, a bunch of people with EQT shirts. Is this a reversal down here? I mean, you're pretty low in the pattern with my indicator, pocket pivot, kahuna, and a mobile breakout. It may be. Earnings are out. I'm just, it's hard for me to buy stocks that are falling knives. Pioneer looked better to me, sitting on the 200. A break above here might be interesting. It's got good earnings per share growth. Quep, Whiting. I mean, I'm just looking for something that jumps out and says, buy me. And so far, Pioneer has been the only one that said that to me. Continuing down my list of top 10, infrastructure software. And Oracle. Did Oracle turn into just a monster stock again? Big move on Oracle. Probably not anything that's actionable for me right now. Here is Symantec. It's interesting here. It's not squeezing. It's sort of coming up off of sort of a V double bottom, a little close to be a double bottom. Progress Software gapped up and pulled back into the pattern. Rapid 7, nice bull run. Maybe it's the time to get here. A Bible gap up, a mobile breakout, pocket pivots and kahunas. That looks interesting. REITs, a lot of them rotated out of favor. We're finally starting to see some of the shopping center REITs get hurt. There are some up here. I like the second one. Visi, 5.2% dividend, pulled back to the 200. This one I like, American Asset Trust. Why do I like it? Uptrend, sideways, pocket pivot, my signal, big volume, in a squeeze, 2.4% dividend. I look for maybe make it move up a little bit and get me a kahuna to get in it, but that looks interesting. Communications equipment. I just wish I didn't know the name of these stocks. I didn't take this because I look at Motorola and I think shitty electronics. What I should have seen is 73% of the group are in a buy. And this thing is just a nice mover from 130 up to 170. New buy signal, pocket pivot, and volume. And maybe the reason why the markets moved on Friday in the afternoon at the close was that rebalancing. That's possible, but the Russell seemed to move the least. Maybe that is the rebalancing. I didn't see anything there. All right, so I looked at the top 10 groups. You're probably getting tired of me. I'm getting tired of me too. Let's look at the stocks that made it to my buy list and then see if there's a story for me to tell. I got 82 stocks here. One of them is just plain weird, which is this ETF. Why would this make my list? Because it's about to break about a 200, had a kahuna, had a mobile breakout, and it pays a 10.9% dividend. That's why it made it to my list. Let's look at industry groups. I talked about regional banks. There were a bunch of them that I liked. I talked about biotech. I've already shown you these. A couple of these that I liked. Specialty pharma. I showed you some of these that I liked already. A couple other things to point out. Diversified banks. These have been destroyed. That was a distribution of a D. But you look at Bank of America, gapped up above its 50 with a mobile breakout from a squeeze, a kahuna, and a pocket pivot. You look at Citibank, it's got some better earnings per share growth, 2.6% dividend, breaking out. You look at JP Morgan. So these banks were allowed to increase dividends and buy back shares, sort of ingredients for stocks to go up. I mentioned oil gas services. We'll go through those real quickly again because this is a group I think might be interesting. Arch Rock, 5% dividend, good earnings per share growth, breaking above a downtrending 200-day moving average. Cactus, I showed you. HP, an old name, 5.6% dividend, great earnings per share growth coming into the stock, certainly a turnaround play, lower in its pattern. Here's Pump, I showed you that already. Schlumberger, I showed you. And FTI, I showed you. All right. What other do I see here? Now let's rank them from let's see if there's any that look worth talking about. Rent to Center was the highest ranking one. Obviously a clear uptrend. Pullback breaking out here. Good earnings per share growth, much higher than its multiple. That excites me. Ingersoll Rand, don't know anything about this company. Boring industrial company, uptrend, sideways, mobile breakout from a squeeze, a Jeffrey indicator, a pocket pivot, and kahuna. Four groups had new buy signals. Four of the group had new buy, 85% in the buy. This wants to go higher, a weekly high close doji. Moby Corp. Uptrend, pullback, big candle here. All my favorite indicators firing a new weekly bongo, mobile breakout from a squeeze, my momentum indicator, a pocket pivot, and a kahuna, and a weekly high close doji. Like that pattern a lot. NanoString. This is a life science company. I liked its pattern. Uptrend, pullback, big move on Friday, and maybe that's too big to get involved in as it moved 2.77%. Something's going on with this stock. It's got to get above its prior highs, but that one looked interesting and made it to my watch list. And I think that's enough. So I have a large number of stocks on my watch list. That was interesting. I'm not suggesting that anybody go out and short anything until the market determines its direction, but I found stocks that are going to be my sort of my sentinel. I will put my watch list and my sell list into my trade station, and within my trade station, I'm going to be monitoring during the day on a bigger monitor so I can get more of them in here to look for stocks that might give me compelling opportunities on the longs and the shorts. I think we've got a pop to the upside. How long it goes, we have to break out of the box, and other news will drive it. Most important, let's not forget what this week is. 4th of July is a very meaningful date in this country. It's also a date that unfortunately a lot of people die in car wrecks. So please be safe. Enjoy your ethanol, your alcohol, not ethanol, God, that would be bad. But don't drink and drive, and let's get together again alive and healthy next weekend. Have a great week. Happy birthday to the country. Goodbye.